Hi guys, so in this video I am going to go over how you can unlearn candlestick analysis, candlestick patterns, weakness and strength of a candle, etc. So what you want to do is if you're in the middle of trying to unlearn it, but you're still getting stuck on like dojis and pin bars and all this crap, what you can do is actually just make the colors one color. So instead of bullish and bearish, just make them one color. And then basically what we're doing is we're just watching to see how the candles represent and react to the prices that we want to enter on. So I know it's a very different way of what 95% of people trade, but it is the most profitable way this way because you have to think, like, you have to have a bigger mindset in regards to what really is moving price. It's not candlesticks. And so people emphasize so much on different patterns and all of these types of things, and it's distracting you and brainwashing you from really what you need to be focused on. So on the 4 hour time frame, and I say this because I've been trading for 10 years, and the first 3 to 4 years I was learning like everybody else, and I literally figured out my system, like I've said in the previous videos, by back testing. So I know like what works and what doesn't. And what honestly, like, some people will say, oh, well, this works for me. Okay, well, are you making 6 figures or 7 figures and consistently profitable? No, they're not. Maybe on a demo, but that's it. Anyway, point being, so we draw the zone at the major structure. We draw the zones on the 4 hour structure. These are like our major reaction areas where we know it's going to be a big move, essentially. Okay. So we have one right here. The 7-ish price is struggling to break below. This has to break below in order to continue down to like 190, 189.5, 189, etc., etc. But I think it will. Patience. So when you're trading GJ, you can actually look at the JPY index in order to see like an extra confluence or confirmation based on the direction of the yen. So if the yen is bullish, you'll know that this drops. If the yen is bearish, it'll continue up. But you can always look at technicals regardless. Okay, so we have our prices in, we have our zones in, and then on the 1 hour, you can draw in your minor areas. So like, for example, if we take this top, that's about 140 pips, it's normal for it to correct. So wherever it corrects, you can also look left. I know it gets kind of messy because it's just choppy, but you can just put specific areas that are touching the most on your chart, and then you can draw a zone. Some people just like drawing the rays, like the horizontal rays. Some people like the zones, whatever. But if you are drawing the zones, you want to make sure you're identifying price. So one thing in the industry is that people will say, oh, well, it takes days and weeks to take a position, and don't enter during news and all these things. News is majority of the time already priced into the market. It's a numbers game. So it doesn't matter what the news event is. It's going to continue that technical way. It's all technicals. I know some people will argue and say that it's not, but it is. I figured it out. So basically, you can get in even if you miss it. So this is major structure right here. Came to the 193 and tested in once, twice, 3 times. So there's usually 2 to 3 reactions at a specific area before it continues down. So in this case, we have manipulation out of here. And people would be like, oh, okay, well, I'm going to wait for a bearish candle, and then I'm going to short here, and then their stop loss is going to get stopped out unless they had it at like 30 pips, because also too, like, even if it was here, you have to think about spread. So realistically, they would get stopped out, it would go in their direction, etc., etc. And then basically they would get back in. They'd be like, oh, okay, like, here's a bearish candle, I'm gonna enter here, and it's just a mess. So you can get into this structure on the top. A lot of people don't know how. I didn't know how back in the day. I had no idea because I was so focused on the freaking individual candles. I'll show you how to do this. So basically, and you can back test this over and over and over again. So if you jump down, so let's just say, actually, let's wait till like it actually approaches. So basically, this continued up the 300 and the 244. So this continued up. If these prices were to break, the candle would close, test in, and then continue down, and then this would be your target. But since it ended up respecting, so I'll show you, since it ended up respecting and tapping into price, that means that it respected the 3 and 2. And also when it gets to major structure like this, it always will tend to go to major structure and then drop. So how to get this entry at 193 is you would actually jump down to the 1 minute time frame and look for reactions if you don't get them on a higher time frame. So for example, here we have 1 reaction in full and we have 2 here. So what you would do is you would enter on the second reaction right here at the top. You'd have to be prepared for this. What is this? This is London. This is entering London. So that was midnight. So it just depends on if you can trade like that. But anyway, you'd have your entry at 193. And then basically for the stop loss, technically you could do like a 6-pick stop because we're entering on the 1 minute, right? The lower you go, the more price action you see. But to be honest with you, I like to do anywhere from 15 to 30 pips because of the fact that it just gives it room, honestly. And as long as you're going in the right direction, you don't really have to necessarily like freak out about the stop loss. It's just there in case you're going in the wrong direction. So I would personally put this at 15. You can put it like that you can put a tight stop in that sense, but I just like to leave and give it room. And then as it's trending in profit, like 5 to 10 pips in profit, you can put a stop loss close to break even. But as it keeps trending, you can actually bring it like, so 193 to let's say 192, you can put it like 25, 50, 75% in between. It's totally up to you. But make sure you have a stop loss to protect you. There are times, again, because I have so much experience, that I don't enter a stop loss right away. I don't recommend that for a beginner or someone that's not consistently profitable. I just do that because I set alarms or I'm looking at the market or whatever the case is, but also I'm more confident in the setups that I take and stuff like that. But sometimes I'll set like a mental stop loss, and then if it hits that price, I'll just manually get out. But it just depends on if I can watch the market or not. So anyway, so you'd enter at that 193. Now let's say you miss the 193 and you want to still enter. So this is where people in the industry will be like, oh, well, you got to wait a day or you got to wait 2 days. News is coming. You can't get in. And so it's very wrong. It's very wrong. News creates momentum. News is already, it's a whole ass numbers game. Okay, so just keep that in your head. So don't let news affect your trading. Like, get in, don't get out, just follow your analysis, follow the technical game. Okay, so this is what the entry would look like. Now, let's say, for example, so basically our target, let's go to 1 hour. You never look at your target on a lower time frame because there's too much price action on a lower time frame. So basically our target would obviously be here first. We can add in like a minor structure right here, making sure that breaks at whatever price that is, 192. And then if the 192 breaks, it should continue down. I don't even know anymore. Can't remember. So anyway, so yeah, so these two prices have to break. So basically it tests into that 192 and it retests, but this 192 has to fully close below. So then it fully closes below and tests into our next prices. So when we're doing this target, it would be, so, I mean, the structure's obviously it broke, but it usually does, honestly. And then it continued. So it retested this broken structure. We broke below the 92 and then continued down. So this would be our target. Now, these two prices have to break below in order for us to continue down, but this was already like a 1 to 10, 156 pips. Most people would be out by then. But the point is, if you miss it at the 193, you can still get in. So if we jump down to the 1 minute and we see those two reactions that I was talking about. So right here, 1, 2, count down, okay? So from 193, count down, you can count down as much as you want, honestly. You can count in 5s, 10s, 15s, it doesn't matter. I don't want to give you guys too much information. Like I said, I can't expose my entire strategy because of the fake traders on here that would take my information. But essentially, you're just adding in, doing basic math. I'll give you that. And you can get in on like little minor break-in tests before it ends up actually dropping. You can even get in here if you wanted to at the break-in test, but the point is like if you miss it at that major structure, just count down each number and you'll be good to go. Okay, so if we go back, oh crap, I got rid of my sell thing. There you go. So basically this tested into price. We'll do a little bit of back testing here, I might as well. So this tested into price. Another thing too is this is coming into London. So London's going to seem like it's going to go back up, but it's just retesting at a higher price to add in more sell orders. So you have to be careful of what time you're entering at and like when you're getting in. This is why you don't use a small stop, because let's just say you entered at 300, like another entry, and you put your stop way too close, like even 20 pips you would have got stopped out. That's why it's so important that you let it manipulate first and then you would get it on the close. So I'll show you what this looks like on a 15-minute. So basically it manipulated. It came to this higher price to add in more sell orders, and then it continued. So this is where you would add the extra entry, but you got to break that down to the 1 minute so you can get more price action at that zone, so you feel more comfortable entering. So it manipulated above 300. So basically you wait for it to close. Here's like literally the quickest break in test at that 244. You can enter here and then go back up on the higher time frames. Even if you entered too early, like let's just say here, it's fine. Like you wouldn't get stopped out. That's like a 3 pip stop. If you had it at 15 or 20 pips, like I keep talking about, it would have been fine. But the point is there's so many prices to get in on and so many opportunities to enter. So anyways, price needs to break above 244 and 300 in order to continue up. So it comes back down for one test. So 1, 2, and then basically we'll see if that price can break. Nope. So it comes down. Okay. So another thing, if you're in this live trade and you short here, and so the best part of this is that you can sell and buy at the same exact prices. It's awesome. So basically we have 1 test, 2 tests in here. Let's just say your target was here or it was even down here and you were thinking, okay, it's ready to go. And it reverses on you before it tests into the target. So for example, this is 418. We could count 514, and then basically we could count in a 6 or even 550. So what you can do is if it doesn't get, obviously you want to have minor targets in between just in case, and multiple levels of targets just in case it doesn't break. So if it comes to that 4.6, or if it doesn't come to that 416 and it tests into that 5, you can go on the 10 minute and you can see multiple reactions at that specific price, but you can also see it close above. So that would be an indication that it's going to go back up. This is when it gets annoying because it starts ranging. And so what you can do is you can wait for it to actually be ready to go, because if it keeps ranging like this, you just want to wait until it starts trending, because if you keep getting stuck in this and getting sells and getting overwhelmed, it just gets annoying. So then anyway, price comes back down and then starts breaking above. We start ranging, accumulating orders, and then we start breaking. So there was multiple opportunities to get in at this 244 or 300. It's just that it manipulated a little bit, it ranged a little bit, and then it started breaking out. So what you can do in this case is, again, never enter in the middle of structure like randomly, especially at the end where it's close to the reversal zone, because it ends up correcting. And the reason for that is because different days and different sessions are coming in. So let's just say this was New York session. Actually, this was Tokyo. So this was Tokyo. London brings it up. New York tests in and retests and then continues down. They're trying to all get it at a better price, and then they add in the sell orders and all the money. Okay, so the point is not entering too late. You can enter on as many prices as you want. So let's just say you were waiting for this to test in and it started breaking and you wanted that confirmation. Even on the 192 here, it ended up breaking and testing. So to get this price action, you can go on a 10-minute, whatever, and you can basically wait till that 192 breaks. And again, if you get in too early on a lower time frame, it's fine. Like, let's just say you got in here, your stop loss, like, there's so much room. So there's so many opportunities to enter before it actually flies down. So anyway, so these two prices have to, so we can extend our target, we could take profit and add a new entry, etc., etc. It just depends on when you can trade, all that. So these two prices have to stay below in order for it to continue down. If not, it's going to close, test, and come back up. So let's just see. Okay, so it closes, and then these two prices have to break below in order for it to continue back down. So it comes up for a correction first, and then basically closes below, comes up to the 192. Oh, here we are. I didn't realize it's live right now. I thought there was more price action. So it comes up to the 192, it retests. This is what took a little bit. I had no patience because it kept correcting for a bit because there was a holiday on Monday, so it took a little bit of time, to be honest. So even on the 30-minute, you can see two reactions at that 192. I had a couple group members take that trade, which was great. I ended up taking it at, I'm in this trade right now still. One sec, let me check my entry. 191, 510. So I was focused on the 500. So I got in on a smaller time frame, so I was a little bit late. But anyways, it ended up testing in once, twice on 192, and then broke and tested that 500, and then continued. So for this to actually break, the 6 and 7 need to break below in order to head to 4 to 190, and so on and so on. So you're basically just watching how they're reacting to that specific zone and then entering at the zone and the number. Like, do you see how we're not entering on any like candlestick pattern or chart pattern or any of that? We're just focusing on structure and price. So I hope this helps. If you guys have any questions, let me know in the comments. Please like and subscribe.